CNBC-TV 18 Weekender.
Welcome back, still in conversation with MARICO'S Saugata Gupta. Saugata, before going into break, we were talking about your international business. Now let's focus on the Indian business. Could you tell us what is the medium-term revenue target for the Indian business? And secondly, what kind of volume growth are you anticipating?
So one of the things we must do is to get back to the 8 to 10 and a double-digit volume growth. Now, unfortunately, what happened, we were expecting a recovery in this second half and the demonetization happened. We are going to wait. I think things are beginning to settle down, and obviously we want to get back into the first step, which is a 10% kind of a volume growth. Average inflation anywhere in the last 5 years has been 3 to 4%. So a 10% minimum volume growth delivers a 14 to 15% CAGR, which is in line with our aspirations.
So 10% volume growth, can we expect that in the first quarter of FY18?
Well, it's difficult, but definitely I would say second, third quarter. Things are still settling down. The other thing obviously will happen is GST.
What is the kind of disruption that you're expecting happening because of GST?
I think 1 or 2 months.
How ready are the lower rungs of the supply chain? What are the key concerns of retailers and distributors, and what is the company doing to fix that?
So as far as distributors are concerned, it's not very difficult because they are anyway part of the system. I think the issue that will happen is billing to the, in terms of the billing to the retailers and the, in terms of the wholesalers. And that will take some time to settle down, that issues. And there will be some issues in terms of their IT readiness, their settling in, the reporting that will happen. It will take time to settle down, and especially I believe wholesale and the rural retail because of the compliance issues. But as I said, I would believe that I think it may be taking 2-3 months, a quarter to settle down things. But then I have to see from a relative context, an organized player is much better, will be in a much better shape than an unorganized.
Can you tell us then what is the opportunity there as far as the unorganized market is concerned in the coconut oil business, and secondly in your Saffola business? What is the opportunity?
So I think in coconut oil, as I said, it's still, we have a 56% share, our rural share is still 40%. There is enough, I think, better opportunity of accelerating our share gains there.
Marico has been at the forefront of supply chain as well. What exactly are you doing in the distribution chain?
The biggest thing is the visibility of what actually is happening. So we actually have a real-time secondary system. We now have an auto-replenishment, so therefore our entire sales force are not in, they don't involved in primary selling. And we are now doing an end-to-end automation right through till our vendors who supply our, our packaging material and other things, and to the trade.
Is that all, or would you like to increase your reach as well? 4.6 million is what you have right now. How much would you like that to grow?
So our direct reach we definitely want to increase. If I want my new portfolio to succeed, there are 3 kinds of outlets, types or channels where we are not the best. I think they are chemist, cosmetic and food. And a lot of our new products and our new portfolios are geared towards that.
Okay, you excited me by talking about some new products and the new channels that you would like to sell those new products by.
We are excited about where the penetration is low, but we believe it's going to have explosive growth is the entire male styling part.
Yeah. So what are the products lined up for that?
So I think we just have gel. In the last 2 years, we have concentrated on driving category penetration through the price point. So there are a lot of things like waxes, pomades, and a lot of trends. And in this, it's important that you actually increase the velocity of innovation, and that's one of the challenges we have to face in Marico, where your core business, it's a kind of a business as usual. There's a rhythm of innovation which is much more slower, it's more scale solid, but there's the other Marico, the new Marico, where the rhythm of innovation has to be much faster. So
you earlier would spend about 10% of your net profit back into innovation. Is that going to increase going forward?
I think given the profit base has also increased, that 10 is sufficient, I believe.
So is it fair to say that the bread and butter will come from your core business? On that you can add jam from, say, the north and the Hindi belt, and then on the side you will get croissants coming in from the styling products. Is it a fair assessment?
Yes, and the food.
Okay.
So you have the multi-grain along with the croissants.
Okay, tell me about food. Rice didn't do too well, so how confident are you about your foray into food again?
Rice, I think, was a commodity. We went into a rice kind of a category, which obviously we believe that we don't have a right to win. The reason we succeeded in Saffola masala oats is that we took a Western habit, which was breakfast. We Indianized it in taste, and then we delivered, it converted consumption occasion from breakfast into in-between meals. I think Saffola is a very under-leveraged brand in terms of the product offering. It's a very high equity on health, and therefore I strongly feel there's a huge place Saffola can have in between meals consumption. However, the biggest learning which we have had is that if you even want to, push Saffola into any of these food territories, you have to design a tasty product which happens to be healthy. An Indian consumer will never dilute the expectation on taste.
But then again, those are red oceans, highly competitive. Every food brand right now also wants to come out with their own healthy variant. So how do you expect Saffola to then gain that market share out there?
I think the opportunity...
Where's the space? Yeah.
The opportunity is huge. Number two is, are you coming from a health equity or are you coming from a taste equity? The Saffola's right to win from a health equity is far higher. And as I said, I completely agree with you because we have to deliver on taste. If we don't deliver on taste, it's not going to win. Yes, there will be 2 or 3 players, but sometimes in a category to expand, you need 2 to 3 players to invest behind innovation and advertising to grow a category.
Alright, so what is the category we're talking about here?
So we'll see something panning out over the next 12 months, definitely.
Saffola crossed 100 crores in revenue last fiscal. What is the target?
Saffola Foods, I think the first immediate task is to get into 200 and double in the next 2 years. And the reason is, as you know, food is capital intensive business, it needs scale. At 200 we break even. And obviously in the next 5 years, I would like to see anything between a 350, 400 to a 500 crore food business. 500
crore food business along with the core business being of what size?
So the Saffola is a 1,000 crore the oil business, and I believe given the penetration of super premium, I think it can chug along peacefully at a 10% plus volume growth. There is one area which we haven't tapped so far.
Which is?
Which is the super premium, which is a leaky bucket to the things like an olive or a canola.
So why aren't you coming out in an olive oil?
So olive oil is a commodity. If you notice Saffola, it comes up with a blend which is best suited for the Indian health. So I think you will see some action in this space. As I said, that is one area where it's left vacant.
Virgin coconut oil?
Yes, virgin coconut oil we've already started making it in international markets. That's something which we definitely want to bring it very soon in this country.
So okay, leave me with a number. 10,000 crore top line by when?
I would say that we should be crossing that sometime in the next 4 years, definitely.
Sometime in the next 4 years, narrow that target a little bit.
So, as I said, that first objective is to grow 10% volume growth. We have had a 3-4% inflation, so we should be targeting anything between 14 to 15% revenue growth. That brings us to that zone in the next 4 years.
All right, hang on to that thought. We'll take a short break, come back, we talk about competition, we talk about MARICO'S foray in other segments, and then we see a candid side to Saugata Gupta.
CNBC-TV18 Weekender.